Wow. Substantiality and economic effect. These two items is a lot of things moving, a lot of moving pieces. Substantial economic effect, as I mentioned earlier, is the heart of partnership tax allocations. Now, as you saw, this is very difficult. It's one of the most difficult areas of partnership tax. What you're about to see is I put together kind of a guide to help you piece together all the tests and all the items, going through economic effect first and then substantiality when it comes to whether an allocation meets substantial economic effect. Look at my costume. What is this? This is Tetris, right? Some of you might recall Tetris. The idea of the game is for the pieces, as you see there's different pieces, different colors, different pieces, and they fit together. If those pieces do not fit together properly, then it keeps stacking up and you lose the game, right? But if you fit those together, those pieces, those levels, they start being eliminated and simplified, and that's exactly what I'm doing in this next video. I'm walking you through the steps. This area is very mechanical when it comes to economic effect because the safe harbors, which is what we're focusing on as tax professionals, because we want to make sure that the allocation of our clients will be respected. If they're not respected because we don't meet substantial economic effect, we don't meet economic effect in that mechanical aspect, we could have malpractice. Now, as you saw from the lecture, the earlier video, there's something called partner interest in the partnership, and that aspect, right, PIP, that is the default if substantial economic effect is not met. Now, under partner's interest in the partnership, there's different ways that it can be allocated based upon the facts and circumstances or based upon certain rules. You're going to learn more about that in the next video and how that fits together with everything, and that's, again, how I designed it. But we want to avoid that at all costs. We want to make sure that we are substantial economic effect. Again, economic effect first. That's very much mechanical. We want to meet those safe harbors, either the basic test or the alternate test. Substantiality is more subjective. I do mention that. And some of the items like transitory or shifting allocations, those elements are mentioned as well. But again, the next video is really going to be key to help you understand. It's going to walk you through how everything fits together, and very important to understand this area, the 704B regs and how everything works. When you're first learning about this, or even if you're a tax professional that's been doing this for years, we always go back and we have to trace the steps. The order is crucial, very, very crucial to this area. So again, just like Tetris, the order of how things fit together like a puzzle, right? If maybe Tetris isn't your forte, maybe you like puzzles, right? Jigsaw puzzles, you got all these pieces, they gotta fit together properly. That's like this area. Many mechanical areas of the tax law, you have to make sure that the pieces go in the right places. That's what we're about to do when we talk about substantial economic effect. It will help you understand it a lot better when you learn those steps and how everything fits together. All right, so with that, let's go ahead and let's take a look at the flow chart or the analysis or diagram of how everything fits together for substantial economic effect, 704B, the substantial economic effect introduction rules. And then we're going to look at some problems afterwards to put all that together. All right, so I hope you enjoy that.